What's up guys, I welcome you in this video. We can see here we have a beautiful uptrend, and if you can observe around this area, you can tell that the market is now reversing, as we can see that our trend line was broken. Not just our trend line, but telling from this wave going down, from this corrective going down, you can see that it's a very huge corrective wave which led to the breakout. So in such structures or in such scenarios, we know that this is indeed a sign of a reversal. But the main problem that we face as traders is, when should you actually execute your trade? When you observe or when you see a breakout, we know a lot of people will tend to open a position immediately when that breakout take place, which is something very wrong. Why? Because when the price is in this place, it is not yet confirmed if it is indeed a breakout, because it can still go back inside that channel or above that trend line and continue to go all the way up. So it's not indeed a clear confirmation by price touching the trend line, so you don't have to necessarily execute your trade in that position. But what you should do is to make sure that you keep in mind the properties or the characters of a healthy trend. What am I talking about? A healthy trend, for an example, an uptrend, we know that it is made up of higher highs and indeed higher lows. So the same thing applies to a downtrend. It is made of lower highs and lower lows. So if you see higher highs and higher lows, it means that it's an uptrend. This is what we see here. The highs are getting higher and the lows, they're also getting higher as well. But if you begin to see lower highs and lower lows, it means that the market is moving in a downtrend, and it's safe for you to make a decision on the seller side. But if you execute a trade in that area or in that spot of a breakout, it is not yet confirmed if it is indeed a seller's market. Why? Because we haven't yet observed a clear sign of lower highs and lower lows. So one trader can say, hey, I can observe here the market is moving down, giving me these highs and lows which are getting lower and lower. What I can say is that these highs and lows, they are necessarily patterns within a pattern. What's the main pattern here? The main pattern is that the market is moving in a corrective wave going down, as you can see here, just as it did in this area here. So you shouldn't take these highs inside this corrective wave or these lows inside this corrective wave as necessarily a sign of seller strength. And the same thing applies here. This wave going down was indeed a corrective wave, so the entire wave was just a seller's wave. These patterns taking place inside that wave, they don't count unless you are looking for an entry. That's when you then analyze them. But what you should pay attention into, it is the main wave itself, the wave that makes the bigger picture. For an example, this wave, we treat it as a downward wave going down. So we need to observe waves of such magnitude, or waves which are closer to this magnitude, for us to actually say we have a lower high or a lower low. So what you should do as a trader, let me just clear my screen, I'm sorry. If what you have to do as a trader is to actually wait, let me put back my trend line. What you have to do as a trader is actually wait for structures to be formed after the breakout, structures that will confirm the downward move. What am I talking about? I'm talking about the market giving us a corrective heading on the upper side and then beginning an impulsive. So if you see a really reasonable corrective taking place here, then that's where you should sell from. But you shouldn't just sell immediately on this area. Why? Because first of all, you are selling in the middle of a wave, which is something very wrong. The market might turn against you very quickly. And secondly, it is not yet confirmed if the sellers, they are indeed taking over. I once spoke about territories. If you can see in this video, in this chart, you can see that we have this area here, which is a very significant support area. You can see it is our most recent support, because that's where our most recent impulsive wave began. So it is very important, this area, and you can see that price is currently slowing down. So it is likely that price can just push all the way back again, and then it will mean that this was a false breakout. But what I'm telling you is that wait here and see a wave which is more like a corrective wave. And once you see this wave, wait for that wave to be broken. And when that wave is broken on the downside, then that's where you have to execute a trade in that area, because it is now confirmed that indeed the market has broken our trend line. And then, more than breaking our trend line, it has given us a weak buyer's wave, because if this wave is smaller like this, it will signify weakness in terms of the buyers, and it will confirm that indeed the sellers are strong, as they showed us through this wave, which is very, very big compared to the previous correctives. Not only the previous corrective, but also it can be compared to this impulsive wave. You can see that they are almost at the same size. If you look at this impulsive wave going up and then the corrective wave going down, you can see that they are almost at the same size, which means that indeed the sellers did demonstrate some signs of strength. So what I just wanted to share with you is that you should make sure that you wait for a clear confirmation that indeed the market is heading downward, because seeing a breakout doesn't necessarily mean that the market is reversing. You have to see the structures conforming to that kind of a reversal that we are anticipating. So I'm not gonna make this long, I'm just gonna keep it short and leave it here. Thank you guys for watching.